What's going on, guys? Welcome back to another Trading Clips video. What we have here for you today is two trades on the stock AMC. So if you know, recently the stock has been making a rebound off of sort of these bottoms that's been put in after the big move for the stock. So you're going to see here in just a few moments a long position on the stock AMC where I just purchased 1,000 shares. So here is the entry on the stock. Now, the red line, horizontal line that you see above at like 1144, just above that is where we're trying to get the stock to go to. So pretty much that yellow box area, red line, pre-market high is ideally the price target that we're going for. In just a moment on the screen on the right, you're going to see some trend lines from a longer term chart come into play. So in a moment, I'll show you exactly kind of why we're picking that target selling zone. So this is sort of at a time period where we have gone through the initial hype with AMC and GameStop. Those stocks have sold off and look like they're about to go lower. So many of us have been shorting it. Now, this is where we have started to get a rebound in those stocks. So we have switched bias for the moment. Instead of being extremely short bias, now we're starting to flip more back onto the long side. So right now it's just 1,000 share position. I believe once this position concludes, it ends up being about $300 or somewhere in that area's total P&L for the stock AMC. So right now you'll see that we're kind of hesitating intraday at 1128. That's a one standard deviation price. So a lot of times you're going to see stocks run to these levels and pull back. So knowing that, it helps me stay in a move and not get so scared out of it if it were a big correction move. So knowing that that one deviation price of 1128 on the day can act as a resistance point, then I'm not worried when we get there and it has a red candle, because I know that that's very common to happen there. So far the move's exploding higher. I end up fat fingering in 500 shares on accident when I meant to take off 500 shares just there. So I sold half the position, took it off. And a lot of times I'm going to do that as we get close to resistance points, just in case you don't fully meet that target. You don't get swept in a pullback, and it can allow you to keep some money on the table and really ride sort of a safe position. So you'll see I just closed the position as we hit the tip of the yellow box and the price of 1150. And on the right screen, you'll see a bunch of text and me drawing arrows, and we're pointing arrows at that diagonal orange line. That is a +1 deviation mark on the 1-year day chart. So as prices of stocks run into those levels for the first time on the day, a lot of times you're going to get a rejection. Sometimes those rejections could lead to bigger sell-offs. Sometimes they could lead to the stock topping out indefinitely for the day. Other times they can just be a momentary top that leads to some consolidation that later ends up going higher and through those price points, which actually happened on AMC that day. We ended up closing, around here in the 1150s, 1160s, and later in the day it ran up all the way to, I think $14, somewhere in that area. So you see, we just went through a harsh pullback. Now, imagine if I would have been holding that 1,000 share position that whole way up to 1160 and never closed anything. Then that pullback would have swept down and probably went, below my entry point by a little bit. That could cause me to get nervous, get scared, and close the position, and then watch it go back up without me. So I get in a good move. The stock works. I don't take any off. I don't sell as it gets to my target. Then it corrects, drops, and then I close for a loss just after it goes up. As you can see here, the price ends up recovering. So you could have easily closed for a loss, didn't re-enter, and then just took a loss on the stock overall. So we watched AMC recover, right? Our initial sell target was that first 1150. We watched it sell down, and then it started to bounce back really strong. And that's where we said, okay, maybe we can hit the further price target of about 1190. You see the next red line up? That was our target selling zone, 1150 to 1190. After we saw the pullback of around 1150 get bought all the way back up to previous highs with very good buying volume. If you look at the volume on the chart, you're going to see most of it was very strong buying value up towards the previous high. So it looks good. It looks strong. We've met our first selling target. We've reacted. We've come back strong. Now we believe we can hit the second target, which would be the top of the selling zone that we were able to determine for the time being. So in a moment, you're going to see me change the chart around on the right screen. This is to change the charting time frame to give us new price targets. So you're going to see I change from the 108 or the daily chart to a 180-day time frame. And you'll see that it's still not actually right. I have to go into the settings and readjust this chart here in a second. But you'll see that we come up with a new price target up at 1186 here in just a moment. So you see I'm going into the settings. Ready? I was actually using this screen with no pre-market data, and it was kind of messing up the numbers. So I needed to readjust that to bring in pre-market data calculation, and you're going to see that we come up with the half deviation price point there. So it's 180-day half deviation trending resistance. That's exactly where we closed the target. You'll notice once we got there, we just closed it. We didn't even hesitate to see whether or not it would go higher. Sometimes it can hurt you, but in the best case, I've found that it's always best to stick to your trading plan so that when it's met, you're not holding a position too long, get swept in a pullback, and then kind of ruin the trade. So for me, I like to get in, ride a little bit, sell some, ride some more, and really just try to run to and from the price targets, what I understand. So again, if we go to the price target and then the stock keeps ripping, that's okay. Sometimes that happens, and that's just the way trading is. So with that being said, I appreciate you guys tuning in so much. If this is your first time watching, please, consider subscribing to the channel. We're going to be making more of these videos, and every single day, Monday through Friday, we are running live stock scanners on this channel for you guys to use. So thank you guys very much for tuning in, and I'll see you guys on the next video. Take care.